Hello, this is Bill Prentice. I'm the CEO and Chairman of Meridian. I'm here with Stephen Yoma, our Vice President of Business Development, for a strategic overview and update on Meridian and the Davis project. You're all sophisticated and accredited investors, so you don't need me to go through this with you. You can refer to this at your leisure. This is the agenda of what we're going to cover very briefly in this update. The focus is going to be on the bullet points on the right throughout this presentation. Keep in mind that the refinery industry in the United States is old and dirty. It needs to be cleaned up and restructured. It's our intent that Meridian do this, accomplish this by being an agent of change, and to do so in a very profitable manner. We've been moving forward very steadily over the last several years, but the most recent progress, as indicated in these bullet points, puts us in a breakout situation for both Davis and the company. First item up there refers to product offtake. We've now entered into an agreement with a major retailer in the United States that gives us the ability to cover our product demand and pricing. We also have negotiations in place on a crude agreement that gives us our requirements of crude oil. Pricing arrangements for both of these input and output agreements reinforce and support our revenue model, and in turn make it possible to proceed down the path towards project financing. On the EPC front, engineering, procurement, construction, we need to complete our FEED, which will allow us to finalize a full, firm, fixed price, performance guaranteed EPC agreement for the plant. The plant is also fully permitted, the Davis plant, and we have rough grading complete at the site. All of this progress gives us what we need to move Morgan Stanley and CIBC forward on the project financing, and that is now expected to be complete in the first or second quarter of the coming year. These firms are also helping us on the interim financing necessary to complete this process. And in light of the investment coming in from anticipated strategic investors and the assistance from these investment banking firms, we're looking to complete our preferred offering in very short order. This slide presents our view of the industry and the market. Essentially, the picture this portrays is of an industry that is not able to respond to the large amount of light sweet crude entering the market, and it is also not performing up to snuff with this aged plant and equipment. The message here is that our business model puts us ahead of these industry curves and gives us substantial, sustainable competitive advantage. The origins of the Davis refinery and the Meridian entity are portrayed in this slide, which we've been over in past updates. The point here is the team was put together to enter into an industry that needed to change, and that's the intent not only with Davis, which is a prototype for other refineries, which will indeed provide that impetus for a new, better performing industry. The team is at the lower left. The roster of opportunities that we're looking at is on the lower right. More here on Davis. The point is that the technology and the approach to this business put us in a position to reinvent the industry with a cleaner type of refinery. Air emissions are 10% below industry averages. Greenhouse gas is well below half of industry averages. And the business relationships that we put together for Davis will be replicatable in additional refineries down the road. Again, the business model here is all about technology and partnerships. Those, those items make financing of a large, complex undertaking of this possible and allow us to replicate that model in downstream projects. This slide is probably one of the most important in this entire deck because it shows how using the latest and cleanest technology, you can achieve some extraordinary things in terms of air emissions and other environmental aspects of the plant. Again, the industry is dirty and permitting of the Davis refinery has put us through the absolute ringer. It was a very long process, and we had to develop a great deal of additional engineering in order to make our point that this is going to be a new type of refinery. You can see in this chart on the lower right, the collection of bars on the far right shows the existing refinery near Bismarck, North Dakota. It's not much bigger than the Davis refinery is going to be. The bars on the left-hand side of that chart is the Meridian refinery, well below what you would normally see from an existing plant in this industry. What is not shown here are some other interesting things, including the fact that the nearby Teddy Roosevelt National Park, the traffic that is drawn to that park produces more pollution than the refinery will produce in that area. Pulling together the technology necessary to create a new type of refinery has created a new way of building and managing a refinery such as this. It is such a complex story that we're going to do a companion webinar. They'll be hosted by Lance Medlin from our Houston office, who will go into detail on how the engineering and the way we're going to execute this project is different and better in this industry. The point here for our purposes is that the project uses advanced but proven technology. It is very capital efficient because it focuses only on a single crude oil, and it is efficient and clean on an operating basis. In order to drive the project financing for Davis and for the other projects, we had to reinvent the way that a refining entity addresses the management of crude and product sales. The point here is that we don't care what the price of crude oil is. Our crude will come in at a differential to WTI because of the physical location of the plant. And we'll be selling our products out local and regional markets at a premium to WTI on the basis of market industry indices. That gives us a model that protects the gross refinery margin and allows us to finance this project as well as the other downstream projects. These are enormously capital-intensive projects, so doing things in a way that will safely attract the capital to do this is got to be central to our business plan. Again, this slide talks about the central theme of the company's strategy. This is all partnerships, who we build relationships with, and how we utilize that to achieve the capital goals and to do additional projects down the road. Our ability to work our way through the basic risk issues of a major project financing have been central to the most recent achievement and the decision of Stanley and CIBC to proceed now with the project financing. Generally speaking, risk for a project like this is divided into three major buckets. The first is the permitting risk, which we're done with. Second is the performance completion risk, which is embodied in the engineering procurement construction agreement that we're ready to finalize now that we're going to complete the FEED. The third is the revenue model. The gross refinery margin has to be protected through the agreements and relationships that I portrayed earlier. That allows the financing to proceed. As indicated earlier, the process of getting Davis fully permitted was enormously expensive. The opposition to the project required that we really jump through a number of hoops to make sure that we could show that what we said the Davis refinery could achieve was actually achievable. That investment did in fact create a substantial amount of intellectual property, which we are going to monetize for you, the shareholder, by doing additional projects. As we go forward into other areas like the Permian and Cushing, the cost to us of our 25% stake in each of these projects goes way down per project. The value remains the same or even is enhanced. So that creates a ramp in the value of your investment in Meridian. That value ramp is portrayed in the yellow tab below. Again, we don't want to be the biggest refiner in this business. We want to be the most profitable one. We have a first mover advantage in a business model and a set of technologies that gives us a tremendous amount of value and competitive advantage in this industry. The recent accomplishments that are listed again in this box at the right put us in a position to close the project financing for Davis, and that gives us in turn line of sight of achieving the value ramp in this yellow box here. And that is the way your value of your investment in Meridian will be ramped up as we achieve these other projects. Davis itself is worth well in excess of what we're currently valuing a share of Meridian stock at. But when you start to increase the number of projects that you have an interest in through your investment in Meridian, that ramp goes up appreciably. Let's say in 5 years out, with 2 projects in operation, Davis and the first Permian, our projections, which we believe are conservative, show a substantial amount of EBITDA growth to just below 500 million per year. At 8 times EBITDA, that's 3.7 billion in project value, and our 25% of that is worth a little under $1 billion. That makes Meridian a $27 stock at that point if we were a publicly traded firm. Each project adds another increment of value of that same magnitude, as you can see, ramping up. We already have the site for the Walton Station project down in the Permian. That site will support at least 2 separate refineries. We're done with the first plant. We will take our time going ahead and finishing the permitting for the second. We are exploring a site for our Cushing plant near the various crude collection points and terminals in Cushing, Oklahoma. And that will be our third stop. That completes my presentation, but Stephen has been collecting questions from investors and shareholders. Thought it would be a good chance to cover those.
Yeah, thank you, Bill. Yeah, this is Stephen Yoma, and I've got a series of questions. You've hit a lot of the highlights that we've had from shareholders and would-be shareholders. One of the things that's come up over and over again, there seems to be some confusion with environmental groups and this litigation and how that's affected our timeline. Speak to that.
Sure. Well, forgive me if I'm not polite in this discussion. The litigation relating to our permits for the Davis refinery have been very frustrating. The Meridian team built this company in order to clean up one of the dirtiest industries in this country. And in our view, opposition to the Davis refinery grounds is very hypocritical. At Davis, we have designed and are preparing to build a refinery that deserves to be supported by people who are concerned about the environment. Again, the air emissions from Davis are going to be about 10% of the industry average. Greenhouse gas from a barrel of oil put through our refinery compared to the industry average will be well under 40%. It's fully permitted after a very rigorous review and analysis by state and local agencies. The plant and the company are fully compliant with what is known as the Equator Principles relating to environmental, social, and governance issues. Without being in compliance with all of these things, we would not be able to achieve project financing because, for instance, our major institutional investors would never touch a project that was not so compliant with these. Now, litigation is a fact of life in major energy projects. And we knew that we were going to meet opposition. We just did not realize how intense it would be and how hypocritical the opposition to our plant would be. However, we have met all of these litigation challenges so far. We got the last major permit in June of 2018, and we've been in constant litigation since then. But the last two issues were recently argued before the North Dakota Supreme Court, and we think that we'll be receiving orders and on those two issues here in the next couple of weeks. We're very optimistic as to the outcome. As far as delay is concerned, it would be wrong for me to deny that we have been delayed. It has caused probably several months of delays since the receipt of the permit. The fear of litigation that would result from the permit probably cost us several months before it could be granted to us. So yes, it has delayed us. But in the meantime, we've actually improved the design of the project. We are going to be fielding equipment that's even more clean than what was originally proposed as part of the refinery design. So it hasn't been a waste of time, so to speak.
Over and above a waste of time, all my trips to North Dakota, there's been tremendous local and local support as far as governmental and just the city of Dickinson just kind of chimed in with a water scenario. Could you go ahead and add some color to that?
Oh, yeah. There was something in the news about that several weeks ago. Part of the original design for the project had us getting water from a local aquifer called the Dakota Aquifer. It's a very saline layer of water that is not used for any agricultural or other purposes, but it's expensive to drill that well. We began discussions with the city of Dickinson of using their wastewater from storm and domestic waste, and have recently reached a deal with them where all of the refinery's water, including processed makeup water, will be met from that source.
Great. You spoke earlier in this conversation in reference to crude offtake and what's been going on. I'm of the understanding that the Meridian team has authored some pretty good MOUs or memorandums of understanding. And I also know that we can't really talk about the names, but talk about the volume, if you will.
Well, sure, and that's been an evolving set of issues for us. We early on had agreements to cover all of our offtake of refined products, but those were with companies that did not actually control the retail customer. We have since entered into an agreement with a major domestic retailer who does control that contact with the customer, who will want to take advantage of a lot of the branding opportunities from the cleanliness of the compliance of the fuel that we're going to be producing. That will be a very good long-term relationship for us, and will also extend to our other refineries.
Speaking of the other refineries, Meridian has spent a tremendous amount of money on the engineering and configuration of the Davis. And as far as replication for further locations, that would really diminish the capital barrier to entry significantly, wouldn't it?
Yeah, the investment we made in getting Davis designed and permitted was extensive. Um, Replicating that refinery design down in the Permian, for instance, there is a great deal of similarity between Bakken crude and Permian. And so the engineering will probably be 85% applicable to what we're going to be doing down there. Um, in Cushing, you're actually making use of both Bakken and Permian crude in that set of crude collection points. So again, engineering is going to be much less expensive on a per refinery basis going forward, and that competitive advantage is going to be significant.
You know, I know this is going to be kind of a tricky question because there are some moving parts here, but what would be your best guess, a window of opportunity for individuals to still invest in Meridian before it changes and it's no longer available to individual investors?
Well, the strategic investment that we're in discussion with and the funding that would be coming through um, the investment bankers that are working on the project financing uh, cannot possibly be closed before the end of the year. It just takes too long for entities of that size to move. So clearly, by the end of the year, people can still get involved. Uh, you know, we're going to keep it open as long as we can because, you know, with several projects to pursue, we've got a lot of work to do, and all of that takes capital. So I'd say sometime during the first couple months of 2020 is when that door starts to close.
All right. Well, listen, you've already answered a whole lot of the questions, but if anybody out there has additional questions or requires clarity on anything that we've covered, contact information is below. Happy to answer any and all questions. And we look forward to speaking with people soon. And I want to thank everybody who's taken the time out of their busy day to watch and evaluate this webinar. So thank you.
Thank you, everyone.